First of all, your thoughts on the rally we're seeing on the Nigerian market. It's up again another 1% after coming down for about 2 days. Now we're seeing the market going back up. Your thoughts on the bull run?
Good morning, Wole. It's nice to be back here on the show. My thoughts are very simple. The rally in the market is just being informed by the financial institutions coming up to the end of the third quarter. So everyone is taking a position. You know, we're coming up to the end of the third quarter with the banks. So we're expecting bumper results from the banks. You would expect that, you know, a lot of shareholders are beginning to take position on it. Plus that the bond market rates are steadily coming down. So the best way to get your return is in the stock market. So hence we're seeing a push towards the stocks in the market.
All right, of course, we know the MPC is holding next week, and I think a lot of people will be focused on that going into next week. But your thoughts on how the market has changed? I remember that a lot of people were extremely surprised when we saw that monetary tightening move by the central bank. But let's look at it practically now, especially from where you sit. In retail banking, to what extent have we seen lending rates increase? I think a lot of people are very concerned that we're going to see a huge spike. Have we actually seen that?
You know, as you know, the MPC put up MPR back in July to 12%, and it's kind of tied in nicely with the summer months where we see a lot of lull in activity, economic activity. The banks, from our own point of view, have not seen any major impact in terms of increase in lending rates. We've been very steady in terms of what the lending rate is, but that's partly due to the fact that, you know, it's a time of the year where people are on holidays, people don't actually take so much finance going forward. I think we'll see a difference depending on what the MPC will do next week in terms of coming to the end of the year. You know, as you know, we're going to the last part of the year where there will be a huge increase in activity coming up to Christmas. You know, people are importing things. People need, you know, cash as far as to do the normal retail activities. Businesses also will require inflows coming in. So I think we've not seen the impact that we thought we'll see when MPC announced their interest rates back in July. But like I said, these things always take a little time to see a huge impact on it. So again, depending on what the MPC do next week, which we think they would remain at the current levels, we don't see any major activity until, you know, the last part of the year.
What rates are SMEs and consumers borrowing at right now, though? Can you just show some perspective on that?
Yeah, it varies. I mean, the rates start at as high as 20%, and they go up to as high as 29%, depending on what type of lending the SMEs want to actually carry out, right. Which is, you know, fairly standard, given the fact that, you know, we have MPR at 12%. Okay,
and then I'm also hearing that there is a clamor right now for banks to reduce their charges. We know that beyond the lending rate itself, there are some other charges related to lending. Can you just share where we are on that? And of course, any impact you think this may have on bank earnings? Because when we look at the revenue lines for banks, or should I say non-interest income is very significant.
Yes, I think the background to that is the CBN recently brought out a guidance on draft charges to bank charges. Now that covers basically what a bank can charge, you know, starting from not just the interest part, but the non-interest part, as you rightly pointed out. And the bank the CBN came to the banks to find out what they think the guide should be in charges. Now, bearing in mind that this draft policy has been, you know, there's a bank draft guide that has been in existence since 2002, and the market has significantly moved away from what it used to be in 2002. The guide has been circulated to all the banks, and I think all the banks are commenting back. It is not so different from what it was in 2002, only that the CBN has now decided that, look, they want to focus more on consumer rights and making sure that we're not overcharging consumers.
So will this have any impact on earnings, you think, or is it going to be just very minimal?
I think it will have an impact on earnings. It just means the banks have to, you know, actually think through how they charge in terms of process fees and everything. It will have an impact on earnings in terms of, you know, how you want to position yourself in retail. Retail is not like, you know, corporate business. You know, you have to look at customers in terms of how you charge them. In my view, it will have some impact on earnings, and some areas it will kind of, you know, change behavior and how the banks should actually deal with the market.